Stories now. President Cyril Ramaphosa has signed the controversial National Credit Amendment Bill into law. It's been opposed by the banking industry, which says it'll lose money. The act will give indebted consumers who earn less than 7,500 rand a month a clean break. Let's find out how the bill will help from the South African Savings Institute's acting CEO, Gerald Mwandiambira. Gerald, a very good afternoon to you. Thank you for your time. So give us then an idea of just the sort of relief that this will bring to average South Africans earning below the 7.5 thousand rand threshold.
Well, indeed, the debt relief bill is supposed to cancel the debt of all South Africans who are highly indebted and earn 7,500 or less a month, up to 50,000 rand. So effectively, if I earned 7,500 rand and had a debt of 50,000 rand today, it's gone. I start afresh. And of course, the banking industry has lamented the fact that they're going to lose money because they can't collect those debts anymore. But for those people who earn that low income and are highly indebted, it's definitely going to provide debt relief.
From what I was reading, Gerald, one of the things that this act would allow is for certain applicants to have their debt suspended in full or just in part, but if their financial situation does not improve, only then would it be wiped out in its entirety. Am I understanding it correctly?
That is correct, but in all honesty, what normally would happen is that the person simply says the finances never improve and the banks would have to write off those loans, because essentially if they can't collect on them, they'll have to write them off, and obviously there is that off chance that people will come back and pay back the debt. But essentially, in black and white and to the layman, it means it's a cancellation of debt.
Mm. And what this bill will also seek to address is the problem of reckless lending. We've heard over the years about loan companies that operate via SMS only, for example, where they don't ask Gerald or myself to submit proof of income and that sort of thing before granting these loans. So how much of a difference will this make as far as that is concerned?
I think it will make a big difference. A lot of people have found it easy to acquire credit. So it works both ways. As much as for the lenders, it will make it a bit more difficult to lend. For the borrowers, also, you have to prove that you can afford what you're borrowing. So the banks are in essence saying that this bill is going to, or this act as it is now, since it's a bill that's been signed into law, is now going to make it more difficult for the banks to assess people in the low income bracket, and that it will have the unintended consequence of making debt more difficult to acquire or more unaffordable for those in the low income bracket. However, another school of thought would simply say that it's an opportunity for someone who hasn't operated in that market and doesn't have this legacy debt to simply come in and clean up. Because one of the banks which has succeeded in this low-income segment is a bank that used to give people second chances. And generally, people who've been highly indebted, given a second chance, they do often rehabilitate and do better the second time round.
On the flip side of that, the banks are warning, in fact, or some banking analysts saying this afternoon that what this will in effect do is lead to stricter and perhaps too strict a regiment or procedure as far as banks and allowing people access to credit. What are the pitfalls of that?
Well, I think it's what I'm saying. For the guys and the banks who are affected right now, yes, it's a loss to them. But let's look at the market right now. There's about 3 or 4 new banks coming on stream in the next 18 months or already starting to operate. For them, it's an opportunity to enter this market without the legacy debt. And perhaps if they get their systems right, they can clean up in that market. So as much as the established banks have their cons in terms of what they think is not working for them, it's an opportunity for someone who hasn't operated in that segment to get it right. And yes, it's an opportunity also which might go wrong in terms of saying that it might lead all these people to abomashonisa in terms of borrowing money in the informal market, but it also is an opportunity for someone in the formal sector to get it right.
But also, Gerald, very important to stress is that for those people who are earning 7,500 and below, this will not be an automatic qualification process, because the process will also require them to go through very strict vetting, and if people are found to have lied about their level of indebtedness or their earnings, they too face penalties.
Definitely. I think we need to remind the consumers that it's a law. So anything that's governed by law also means that there's certain legalities which need to be observed. So yes, there will be a means test to establish that you're indeed highly indebted. So perhaps they will consult with debt counselors and use the debt counseling fraternity to establish those people who do qualify for this debt relief, because it's exactly that. It's debt relief. It's not necessarily supposed to be cancellation. Relief means it's a lightening of the burden so that when things get better, you pay back the debt. But ultimately, it's not debt cancellation, but in essence, for many people, that's how they interpret it.
Gerald Mondiambira, thank you so much for your time.